All right, everybody, welcome to another episode of the show. Today we have Eric Statz, who is the owner of Brighton Wealth Management, a fee-only fiduciary financial firm that focuses on building strong collaborative relationships with their clients to deliver comprehensive, sophisticated, and holistic wealth management plans. So with that, Eric, welcome to the show. Excited to have you.
Well, thank you. It's great to be here. I'm honored to be here with you, Chase. So look forward to this experience.
Yeah, I am too. It'll be great. Well, the first question I asked Eric is to talk a little bit about your upbringing. So childhood years, teenage years, or formative years, any experiences you had that helped mold you or define who you are today?
Yeah. I'm from Sandy, so I loved the time when I was there. In fact, the backyard was Draper, and it has a lot of fun times out in the mountains. And I lived right next door to a lot of people don't know this, but the old airport there on the bluff in Sandy, right above Hidden Valley Golf Course. But went to Alta High. I enjoyed sports. I gravitated toward a racket sport back in the late 70s and early 80s, and it was racquetball. But just thoroughly enjoyed my time. My parents, great parents, taught me about education and hard work and just being able to get down and into the dirt and be able to work hard. But some of the experiences as a young person in high school, a unique experience was that I started to learn about business. And I learned about business from going to work at Fidelity Investments. Now, Fidelity Investments, I think they came here in 1986. My mom was the first employee, and I was one of the maybe in the first 100 employees there at Fidelity Investments, which now I think has maybe over 3,000 or 4,000 employees here in Salt Lake. So that was my first experience, and it really formed the next 30 years.
And was that, sorry to clarify, was that during your high school time or shortly after? Oh, wow. Okay.
It was so my senior year.
Oh, wow. Yeah. So what were you doing for them as a high school student?
Oh, a lot of grunt work, sure. No doubt, but computer marketing information. I was gathering information. They used to have a system called the FAST system, and I don't remember what the acronym was about, but it was how to order different prospectuses on different funds. And so we were at the beginning stages of automation, and then I'd receive faxes from New York and Boston. And so it's really at the beginning stages of a lot of technology trends.
Yeah, that's great. Well, what a good experience as a high school student. I was I'm trying to remember, I was working at like a fast food, type chain. So that's a really good experience to have, to get some of that exposure at such a young age. So going from there, I saw you went to, you ended up going to the University of Utah. Is that right?
Right.
Okay. So yeah, you had that experience while you're at high school. What was your thought process going into college? I mean, you're obviously entrepreneurial minded. You had a lot of early career experiences we'll dive into, but yeah, what was your mindset? I want to go get the best job I can. I want to start a business. How did you approach that?
Right. Accounting is known as the language of business. So I went into accounting. I think you went into accounting. Is that right?
I did as well.
So I thought that was the way to learn about business, because I was very interested from my experience at Fidelity Investments. And at the time, Fidelity was very well known for some of their mutual funds, such as a Magellan Fund and Lynch. He was a very well known in the investment community, and so I thought, wow, that'd be great to learn more about business, and I'd do that through accounting. So I received my master's degree in accounting. But soon learned very quickly that accounting just wasn't for me. I liked finance more than accounting. So shortly after graduating, I turned into finance, and we can talk a little bit about that. But I just loved the business side.
Yeah, that makes sense. And I studied accounting as well for the same reasons. It was the language of business, but when you get into the weeds, it's not quite, at least for me, it wasn't as fun as the finance or the real estate side of things. So makes sense. What was your first role coming out of the University of Utah, your first career step?
Right. I was an investment analyst for First Security Bank, their investment management arm. We had some mutual funds that we just created, the achievement funds. And so it was a new and exciting area for the bank. And also this is back in the 1990s, and there weren't investments, and we're still coming out of into the heyday, if you will. It was exciting to see where things were going. I was an analyst, so I'd research retail stocks such as Walmart, also other stocks such as energy companies. And it was exciting to see how those companies were either developed originally and founded, or how they've continued to evolve. So it just was fascinating. And at that time, I read a book called, I think it was called Glorious Accidents by Michael Glosser. He's a Utah person. And it was about exploring different businesses that have been created and have flourished. And it just furthered my interest in the finance arena.
Yeah, makes sense. That sounds like a really good experience. And I later saw that you ended up going to work for Goldman Sachs. Was that subsequent to your time with your first role?
Right. Yes. So I received another designation called the CFA, Chartered Financial Analyst.
Yeah.
Now this is a global organization, 200,000 members. I think my membership is 33,350. Having that designation, I felt like I needed a little bit more exposure in New York, and with more of a Goldman Sachs type of experience. I know that you've been with J.P. Morgan, so just having that not only a name but also that experience, because tremendously smart people there, and there was obviously smart people at the bank, but it was just I loved the relatively short time period at Goldman. But yes, it was more to get more of that exposure for overall investments and also a business.
Yeah, makes sense. And speaking of the CFA, so I know that that's a very intense, credential to be able to acquire. The testing process, I know, is very rigorous. I mean, for what was that process like, the studying, and do you feel like that certification has been valuable to you in your career?
Well, it definitely has been valuable. It's opened doors, and the studying was about 2,300 pages that you had to study for each level of exam. There are 3 levels. Now, back then, you took one exam per year for 3 years. Now I think you can take multiple exams per year, or there are different times throughout the year to take them. Back then, it was only one time. It was the weekend before Memorial Day. So actually, the weekend after Memorial Day. So I always destroyed your Memorial Day weekend plans. So, but the CFA, it was very, I believe, it was rigorous. I've known a lot of people have taken the other exams, CPA and the bar exams, and yeah, it's putting all that together, and you don't know what exactly you're going to be tested on in these 2,300 pages. You just have to know everything that there is in those pages. So I'd like to say that it was pretty rigorous, and and I'm proud of being able to take that exam, and it got me into Goldman Sachs and other places.
Yeah, that's great. I mean, kudos to you. I have friends who've started on that path and have failed and have retried and have failed. And so it's not, for those who don't know, it's incredibly impressive to be able to get that designation. So then going through kind of next steps in your career, Eric. So you're at Goldman Sachs, you're an equity specialist. I saw that you then spent some time with Wells Fargo and Barco. I guess, what was your progression like over the next few years after your time at Goldman Sachs?
Well, There were a few pivots that I've taken intentionally to round myself out and to figure out what I would like to do with my life, and having some passions that I currently have right now. And each one of these pivots helped me develop this passion. So I went back to Wells Fargo, because we had at Goldman, we had a division called GS.com. And back in 2001, the internet bubble from 2001 to 2003, it kind of eroded. And a lot of companies, such as GS.com, Goldman Sachs, has failures at times, and and this might be one of their minor failures, but it actually worked out very well because now they have a large presence in Utah. But GS.com, we decided to basically fold that, and I saw that was about to happen. So I went back to Wells Fargo, that purchased a First Security Bank. And I went in as a portfolio manager working with clients, and that really helped me develop what I'm doing right now, working with clients, getting to know clients, and developing that rapport with them, and how to build confidence and understanding what they would like to achieve. So I love that. But then you mentioned Barco. I had a client that was a very good client that owned Barco Rent-A-Truck. So that developed another avenue for me that later on helped me with my business pursuits. Barco Rent-A-Truck was a relatively small company, but we grew it nationwide, where we were delivering services from coast to coast, even in Alaska. We would rent pickup trucks, and companies throughout the country have copied this example of Barco Rent-A-Truck. And I won't go into all the nuances of it, but it was a product, it was a service that was high in demand, and it just was it was amazing. Back to Enterprise Rent-A-Truck, I believe that they started about 2003, their Rent-A-Truck division, and is very similar to what we did at Barco. So that really helped me develop another business, or a couple other businesses that we can talk about a little bit later.
Yeah, absolutely. And I want to dive more into that. Touching really quickly back on your Wells Fargo experience as a portfolio manager, was that role within Wells Fargo's private wealth group, or was it in like their institutional side? I guess when I think about a portfolio manager, you're managing, you're picking stocks, you're managing a portfolio of investments. Who were your clients predominantly, and what was the outcome or goal there that you were working towards for your clients?
It was a private wealth and also the trust division. So the trust clients were our clients, our main clients. So a trust that with $1 million or $5 million or $100,000. And so we had four portfolio managers. Each one had about $500 million under management. And so around $2 billion under management at the time for our small little team. And you're right, we would pick the investments, it would be stocks, and ETFs were just coming out at the time. So they'd been around since mid '90s, but really weren't liquid enough until the early 2000s. But ETFs became a larger focus. But still, we had a lot of stock-centric portfolios.
Yeah, makes sense. And was the strategy for your portfolio specific where is it like small cap, large cap, emerging markets, or was it a blended? What was your strategy for the portfolio?
It was large cap. We would hire other managers for the smaller cap and micro cap arenas. That's definitely an expertise that you need to have boots on the ground. And we're so blessed here in Utah to have some great investment firms. So we could invest in anyone globally, but some investment firms really grew up here that were very focused on micro cap and small cap. So they were perfect for us. So we'd use them and then have our large cap expertise.
Makes sense. That makes sense. And then you mentioned Barco. It sounds like it was one of your clients' businesses that
Right.
you were helping with. So what was your role? I saw was a chief operating officer.
Right.
How did did that end up being a full exit from Wells Fargo and transitioning full time? And kind of what was your role during those years at Barco?
Yes, exactly. So I did exit, saw this opportunity, saw some other opportunities within the Barco arena and how we could expand this. And so one of the things that I did and my team did was we expanded it with some auction networks, specifically ADESA auctions. And if you're not familiar, two of the largest auctions in the country is Mannheim and ADESA. And ADESA, I negotiated deals with them, and my team did a great job being able to develop a network throughout the country to have our vehicles placed in ADESA auctions, rent them out, and then come back and sell them. So it was very scalable. It was very lucrative, and so it was just a great experience. So that gave me some springboards into into the same arena, but with other companies.
Yeah,
later on.
The move from Wells Fargo to Barco, I mean, that's a big pivot in terms of going portfolio manager. You're in stocks, your investment, into a chief operating officer of a truck rental business. You said you took an opportunity. I guess what was your mindset like to make that shift? It must have been, you must have seen an opportunity that existed to pivot completely in your career at that stage.
Yeah, that's a good point for me to reflect upon, because it was big pivot for me. And as I said earlier, pivots are important to make at times. And I believe that I've been researching businesses and been doing all this analysis on all these businesses. I wanted to be more involved with the business itself. And so this was an opportunity for me to be involved with Barco and be involved with the nuts and bolts of that business and to grow it similar to other businesses. And most businesses start off small and they become large. And so that's what I wanted to do. Going back to that book, Glorious Accidents by Michael Glosser, or going back to my CFA training and researching all these companies. Well, they all started small. And so I wanted to do the same thing with Barco, and Barco, I believe, has done very well since.
Yeah, that's great. I think it speaks to the importance of being opportunistic and having eyes wide open. Even if you're in your day-to-day role, you can see opportunities outside of your business or even within it. So I think it's great, Eric, that you jumped all over that. So then transitioning to Flex Fleet, right? That
Right.
ended up being something that sounds like you took more of the reins on. So tell us a little bit about Flex Fleet and how you were able to get that off the ground.
Well, in 2013, my wife and I created Flex Fleet Rental, January 2013. And I saw a huge value in delivering vehicles, particularly at that time. Energy was I believed was about to make a big run, and we do a lot with the energy business and the oil field business, so with 3/4 ton or 1 ton diesel pickups. And so with my experience at Barco, my wife and I created a business plan to put this together, and through that business plan, I brought on 3 other partners to develop it and to flesh it out. And we hired an investment banker, and an investment banker brought in 2 rather large groups, one out of New York and one out of Chicago. In fact, the one out of Chicago is more of a name, a better name group called the Pritzker family, or the Pritzker group, family office group. And we received 2 term sheets from both of them. It was relatively unheard of because we didn't have any clients. We didn't have any revenue. We didn't have a desk. We just had this business plan. Well, these 2 term sheets were it was $30 million of equity, and shortly thereafter, $70 million of debt from a bank. So so it was a great opportunity to. I rarely have heard of another situation where you get $100 million of capital for a business that you have no clients for.
Yeah.
You have no desk. You have
Right.
no revenue. So it was great. So that we were able to develop that rather quickly, and again, go nationwide within 6 months. And so that was in 2013. So we just had our 10-year anniversary of that date, and that company has been sold twice to some large firms. So a private equity firm in that was associated with the Penske trucks, and then just recently, in the last couple of months, it was sold again to a large Canadian firm. So it's neat to be able to see how large that company has become, how lucrative it has become, and its influence across the country.
That's amazing. And going back to before we started recording, thinking about how this was executed. So you're at Barco, you're the chief operating officer, you're in the weeds of a truck rental business. I mean, you're learning, you're growing, and obviously I'm sure you were able to take some of that knowledge to Flex Fleet. But I guess how did that transition go? Did you quit? And maybe you spent some time with Yellowstone on the timeline here, but was that a full on, I'm going to quit my job, I'm going to launch this Flex Fleet company? How did you kind of maintain your lifestyle, cover your overhead while you're getting this off the ground and going to kind of raise this capital that you'd mentioned?
Well, I was fortunate enough to have other businesses so you mentioned investment businesses from when I left Barco to when I created Flex Fleet, and there was a time period of about 8 years.
Okay.
That I had other investment businesses that I was doing, but it really came to a point. Okay, let's do this again, and this truck rental model, and I've done it 2 other times since then. So and it was a lot of fun. It's just but my expenses, my overhead, and everything that was being paid with my other investments.
Got it. And so you mentioned you've done this 2 other times, and so was that after Flex Fleet that you did kind of rinse and repeat with a very similar concept?
A similar concept, different model, slightly. So van rentals. I saw that as an opportunity. So we went into vans, whereas Flex Fleet was principally trucks, 3/4 ton diesel trucks. So we'd buy, 4,000 or 5,000 diesel trucks every year, which is a lot of money. And so, we did the same thing with vans, and then we also have a leasing company as well for municipalities. So slightly different models, but same theme going on here.
Yeah.
With that companies and also now municipalities, they want that flexibility. They need that customer service, and so we love it.
Yeah, and these are Flex Fleet, for example. This is more professional use type rentals. It's different than an enterprise or national where I go
Definitely.
rent an F-150. This is someone who's renting a truck for a week because they need to haul some stuff in their backyard or they need it for their business. What's the end user using these trucks for?
Yeah, it's 100% commercial.
Okay.
And so ExxonMobil, GE, a lot of the utility companies, and they would rent them out from month to month.
Got it.
Upwards of a year.
Okay.
So
Wow.
It's not for a 1 week or 1 weekend. It's
Okay.
not to the retail public, no. So this
Wow.
was everything for. So one thing I've done with my businesses, including Flex Fleet, is try to de-risk it as much as possible. So that comes back to my CFA training and understanding risk. that how do we de-risk the company as much as possible? And so getting the proper insurance is a big part of it. Getting credit insurance on every company, relatively unheard of 10 years ago. Now it's fairly common, but there are trends within business that come out and then become common. But when they come out, they're not all that common. And so I've seen that for the last 30 years, whether it be different accounting practices or insurance practices, and I've taken advantage of those.
Yeah, it's amazing. I mean, and incredibly, unique concept. And I was actually listening to a podcast the other day for the founder of Air Lease Corporation out of California. They do a similar thing where they will buy airplanes and then lease them out to corporations. And so it sounds like a very similar model where you mentioned de-risking, being able to have those leases rolling and using corporations to do that. For the $100 million, I'm curious, Eric, that you received term sheets for. As the founder, you mentioned a couple of business partners that you had ultimately brought on, but how did that structure end up playing out with the debt and the equity for FlexFleet? Did you end up, taking all of that capital? How did you, as kind of the founder or the creator of the business model, end up in terms of ownership and role with those term sheets and with that capital that was brought on?
Well, definitely with that amount of capital, you do get diluted quite substantially because you're having investors bring in their cash, and cash is king oftentimes. And so there is negotiations there, and be able to make sure everyone's treated fairly. But as far as the actual capital, how it was used, well, it was used and then some. So we rather quickly in the first 2 years had that balloon up to well over several $100 million of total capital. So because trucks are expensive today. Yeah. Well, they were expensive back then as well, but not nearly as expensive as they are today.
Wow. And that capital, I mean, you're buying trucks. Did you open offices across the country where you could station trucks and fuel them and all of that? I mean, I'm sure there was pretty capital intensive type business model to get it going.
Well, and remember, de-risking and scalability, some of my two favorite concepts there. So no, we only had one office here in Salt Lake. We would but we would stage a lot of these vehicles at, remember, Odessa. So I did use the Odessa experience and stage the auctions at Odessa auctions throughout the country. And we also had a good strategic partner in Oklahoma to be able to a dealership there, a dealership network there that would stage a lot of our vehicles as well. So as far as office space, we were very, very lucrative, but we only had 20 employees.
Yeah, that makes sense. I mean, being able to stay lean and scale like that's very, very impressive. So before we get into Brighton, I saw, Yellowstone and Foresight. So maybe, and you mentioned that you had a couple investment businesses. What else were you doing, between FlexFleet and the other rental companies that you'd started? And how were you spending your time prior up to launching Brighton or acquiring Brighton?
Well, Yellowstone and Foresight. Foresight was more recent, but Yellowstone was more of we had another company called Wind River Investments, and a partner and I founded the company. We developed it and we sold it to Yellowstone Partners. And so it was. So we were. I was living off of my investments there, and at the same time, a friend of mine was developing a company that became Brighton Wealth, and so I helped him develop a little bit of the structure on Brighton Wealth, which I acquired 3 years ago. And jumping ahead a little bit, I wanted to get back, as you recall, back to my experience with Wells Fargo, serving clients, because some of these roles I was more in the executive team, and wasn't able to serve clients the way I wanted to serve clients. I didn't have any specific clients. I had given those up when I left Wells Fargo. So I wanted to get back into the one-on-one, be able to chat with people on a frequent basis, get to know their family and what they're wanting to achieve. And so I acquired Brighton Wealth 3 years ago for that.
Got it. Okay, that makes sense. And so you had a friend who was forming it. You helped them out, and then you ended up acquiring Brighton Wealth. So yeah, tell us a little bit more about Brighton Wealth. You mentioned you acquired it. That takes capital. Mm-hmm. Was that something that you were able to self-fund, or did you need to bring in outside dollars to be able to acquire the business at that time?
I self-funded it, and so that was great. And and now I'm able to develop the platform, the service platform, the investment platform, the way I want to do it. And a big part is that servicing, getting to know the clients. Now, RIAs have grown up in the last 30 years to where they're more buying ETFs and mutual funds, which is what we do. But we have a proprietary methodology that I've refined over the last 20 years of being able to select those ETFs and mutual funds. And it's based on statistics, because I want to have confidence in what I'm investing in. In addition to that, we have an options overlay program that we utilize. So that is a differentiator as far as our investments. So again, options overlay layer, and also this methodology of being able to select the funds. In addition to that, though, we do talk a lot about true wealth and what true wealth is. This is where I want to get with clients and understand what they would like to achieve. And what I find is that there's no right or wrong answer to what true wealth is. And a lot of times I'll ask a client, what comes to your mind when you think of true wealth? And then a lot of people will come up with, well, my stocks, my investments, my cash. And I said, okay, that's a good answer. But then let's go down the road of this. If I have all of that stock or cash or all of your financial assets in my right hand, and I'll be across the table from them and say this, and then on my left hand, I have your character, your ethics, your work ethic, your honesty, your integrity, your experiences, all that. Which hand, if you can only give one hand to the next generation, which hand would you give? And in the 20 years that I've done this, I've only had one person say the right hand because he said he didn't have any ethics. But everyone else has picked the left hand. And so these non-financial, these non-tangible assets to give to the next generation. So I'll tell the client, okay, if that's true, how do we put these together? And then we develop what we call true wealth here at Brighton. And I adopted this from a friend of mine in St. George, that they have quadrants, and I've adopted that to where we have core assets, experience assets, abundance assets, and then financial assets. So the other three assets are pretty much intangible assets, but then you have financial assets. So as a financial advisor and a fiduciary, I believe it's my role in a non-intrusive way, it depends on the client, but to remind them that there are other assets and just pay attention to those assets. And we can discuss it, how to pay attention or to address them. But it's, I've been, I kind of equate it to like it's driving a car. You have four tires. If one tire is underinflated, you may have a bumpy ride. If two tires are underinflated or flat, you're not going to get to your destination. Well, these four asset groups that I'm talking about, you need to have them all properly inflated. And I gave a speech in Jackson Hole once, and a person came up to me and said, you know, there are so many poor billionaires. here in Jackson Hole based on what you just said. Now, I'm not making any judgment calls on the great people of Jackson Hole. I'm sure that he was just talking about a few people that he may have known, but we need to have that balance in all those other assets.
Yeah, I love that. I mean, wealth is so much more than just the monetary aspect of it. There's so many aspects and of the balance, and what truly brings you happiness, what truly makes you feel satisfied in your life. And you mentioned abundance, and before we started recording, you said you're doing seminars, or you're focusing on abundance right now. Maybe tell us a little bit more about that.
Oh, wow. That is such a wonderful journey. I have enjoyed that so much. But we are living in the golden age of entrepreneurialism right now. And we have been in this area for the last maybe 20 years. And because of that, abundance has grown tremendously. So when I do talk to different groups, I will oftentimes start off with how entrepreneurialism is the greatest non-religious miracle this world has ever seen. And the facts support it. In 1820, I've used this chart for a long time, but in 1820, about 92% of the world was in severe poverty, according to the World Bank. Now, the World Bank describes severe poverty as earning $1.90 or less per day, adjusted for inflation. So in 1820, 92% of the world was in severe poverty. Today, less than 8% is in severe poverty.
Wow.
All right. So now that's still a lot of people. That's still 660 million people. And we need to be aware of that. We need to address that. But what happened from 1820 to today? And I've done a lot of studies with economists, and I've done a lot of reading and going back to the history of the 1600s, 1700s, 1800s, and what has happened in Europe, and then in England, and then how it was migrated to the U.S. and creating this American dream. And so with that, abundance has been developed, not only here in the U.S., but worldwide. If your listeners want to have a great website to go to humanprogress.org. It has all these trends out there. And I didn't know this until a year ago, or roughly 9 months ago, about humanprogress.org. So I had these other seminars which had similar charts, and I gave an abundance presentation last November to a group, and a person raised their hand and said, "You know what? I've seen a chart similar to that." And I said, "Well, it's a World Bank. Nothing new here. I'm just trying to deliver this optimism." And so, and they said, well, go look at this book called Superabundance. So I immediately went home and got the book, got it on my iPad and read it, and I was just enthralled with it. It was just amazing because I like numbers. That's my nature. I'm a 1 and 0 type guy. I like to see the data. And there was a lot of data in this book called Superabundance. And it says things are more affordable today than ever before. And so I just have become enthralled with it, and it's become a passion of mine, along with a few other passions that I have. But we are living longer. We have better health care. Literacy rates throughout the world have increased dramatically. Electricity rates have decreased dramatically. Cancer rates are decreasing dramatically. Murder rates have been decreasing throughout the world. These are worldwide trends, not just a little group in the U.S. These are worldwide trends. Let's say tree canopy. Here's a statistic that's interesting, that trees in the U.S., Canada, Russia, and Europe have increased 34% since 1980. All right, they take a satellite image and they just see how many trees are represented. Now, rainforest is a different situation. We need to address that. But there's a lot of good things we're doing right now. There's if you look at land that has been set aside by governments, similar to like Yellowstone. There's about 22 million square kilometers of land that has been set aside to protect. Oceans, there's about 24 million square kilometers of oceans that have been set aside to protect. That's over 46 million square kilometers of land and ocean that's being protected. That's larger than the size of Asia. So there's there's abundance. So, I can go on, but I loved that book, and I really, actually, let me give you one example here.
Please.
They start off the book, and I've used this now in seminars. That did you ever see the game, the show Endgame, the movie Endgame, the Marvels?
Oh yeah.
Show?
Mm-hmm.
Okay, all right. So who was the villain in that? You remember?
Thanos, right?
Thanos.
Yeah.
You remember what he wanted to do?
He wanted to take out half the population, right?
Yeah. Do you know why? Why? Do you recall?
I think it was to help everyone thrive, right? Or that was his idea.
Right. So, so there's a scarcity of atoms in the universe. Okay. So maybe a scarcity of food, energy, water. So, hey, his idea, let's get rid of half the population. Well, he was wrong. How many, my kids are musicians. And so I know this answer, but maybe not everyone knows it, but how many keys are on a piano? There are 88 keys.
Yeah.
How many songs can you play from that piano? An infinite number of songs, right? You can just recombine the different notes. And so there, you might have a finite number of atoms in the universe, but because of our intelligence, because of some experiences, because of entrepreneurialism, we can recombine those atoms to building something better, to addressing world solutions or world problems with solutions. And that's what entrepreneurialism does, is find solutions to problems. And you have millions of entrepreneurs throughout the world, and it's the greatest voting machine out there because everyone is trying to come up with a different idea. And as consumers, we get to vote which ones we like. And those that we don't like, well, they fail. But failure is good. It just gives us another opportunity to look at a different solution to a problem. And it might not work, but let's find the one that does work.
Yeah.
So I'm very optimistic about the future. I'm very optimistic about the abundance, that we have enough. We have more. We can desalinate water for 1 cent per 6 gallons. I think 100% of Dubai's culinary water is desalinated. A good, tremendous amount of water in Israel is desalinated. So we can learn from these, and the solutions that are coming up, that entrepreneurs are coming up with, are tremendous.
Yeah, I love that mindset, Eric. I think opportunity, opportunistic, abundance, it's refreshing to hear because not everybody has that mindset. And I agree. I think now there's more opportunity now than there ever has been in the past, I think, especially from an entrepreneurial standpoint. I'm curious, when you do your seminars or when you come across somebody who has more of a scarcity mindset and they're hoarding or they're worried about losing all the time, taking risk, how do you help someone get out of that rut and transition more to abundance, giving, that mindset?
Well, it definitely has to be customized to the person, because everyone has their beliefs because of something that they've experienced in the past. But how do we? So we need to uncover what that is, possibly. But if not given the opportunity to go that deep with someone, I want to bring out these statistics that I've mentioned, and let's look at the facts. Let's look at why we're living longer, and there's or what's happening. And there's definitely problems out there, but we're addressing those problems. So I want to talk with that person about these statistics and what we're seeing, the facts, rather than the headline news that is on the TV. Negativity sells, unfortunately.
Right.
If you're given, and studies have shown that someone might be wanting to be optimistic, but if they are shown a optimistic article and then another article about how there's a gun violence in Chicago, they'll always pick that second article first, even though they want to be optimistic. People are, for some reason, just drawn to that, and psychologists have shown that. And so I want to address with that person the facts about what is going on. I was very young in the 70s, obviously, or maybe it's not so obvious, but I was. But I did have the overarching belief at that time, at a very young age, that things are dire. We have, I was told as a young kid, there's overpopulation, and and I didn't realize it at the time, but there was a book out there called Population Bomb that predicted that a good portion of the world would die of starvation by 1990. Okay, I was also bombarded with the new ice age. Now, whether that was really true by scientific methods, or with scientists believing that, I don't believe that they actually believe that. But it was a theme that was talked about back in the 70s. Famines. I was hit. Now, I was, of course, a young kid watching TV. Every other commercial seemed like it was about a famine, whether it be in Ethiopia or somewhere else. And it needed to be addressed. There's no doubt. We need to care for those. But it was just a negative. I believe I viewed it as negative, and I had those experiences. So that person that might be in that mindset that things are negative. Well, let's look at the facts, and it doesn't show that to be so negative. And then how do we make that jump into being a more positive and becoming an entrepreneur, being a creator? I believe, whether you're religious or not religious, we are all creators, whether we are a creator of art, music, businesses, empathy, love. We are all creators, and and that's what gives us happiness. And one can work for a company and still be a creator, but being an entrepreneur, though, sometimes can create so much more.
Yeah, that's great. Great advice, Eric. I love that. Last few questions here, and we'll wrap up. I guess in terms of what's next for you, you acquired Brighton Wealth. You're working. It sounds like working on growing that. I know you. It sounds like you still have you're involved in a couple other businesses and investments. But what's next for you? What's your focus here for the next few years, do you think?
Well, my focus is spreading the word about entrepreneurialism and abundance. And that's not a moneymaker. And if it brings business to to Brighton Wealth, that'd be great. However, I just want to share that. I have a passion to be able to do that. Second, I want to continue to develop within my business the true wealth structure, and how we can go down the path of helping families create a 200-year family structure, and to where that family communicates and is staying around 200 years from now. And let's create the structure to be able to do that. And then thirdly, my third passion is ultimately to find a way to help reduce the epidemic of loneliness in the world through fostering better family communication. And I believe that there's technology involved with this. I'm researching it right now. I've worked with a number of psychologists with this. I've worked with addiction recovery centers on this. I have some great strategic partners to be able to help me research this. But I have a passion to be able to do that. I believe all three of these passions are connected. They might not seem all that connected, but I believe they are. And I'm excited for the next 20 years.
I love that. And I can hear in your voice, you're passionate about these things. It's something that you're really looking forward to growing. And I think those are all extremely important topics to cover. I did want to ask, speaking of investing, and you've done a lot in your career, Eric, but how are you personally investing right now when you think about your own wealth? If it's just following the strategies you're doing at Brighton, if you're diversifying outside of that, how are you thinking about investing and about money for yourself?
Well, I definitely I eat my own cooking.
Sure.
So I follow the strategies that I have within Brighton. Also love the real estate arena, and so a lot of people will ask me, how do you develop wealth? Well, I'll say there are three ways that I've seen in the last 30 years. And that's number one in a list of priority. Number one is to be an entrepreneur. Second is to do real estate. And so that's why I mentioned real estate for investments. And then the third, some stocks. But definitely real estate is part of my portfolio. Other businesses, private businesses are part of my portfolio, but I have to understand them and to be involved with them. And then as far as thematically, I do like different areas. I love technology. I love AI, where AI is going. I love energy, particularly nuclear, where that is going. And so there's a lot of optimism out there.
Yeah.
A lot of opportunities.
That's great. Yeah, makes perfect sense, and agree with that completely. In terms of advice that you have, and you've shared some of this already, Eric, but for an entrepreneur, someone starting a business, is there anything that you've experienced? You're like, if I was going to tell you one thing, this is what you should think about as a newer entrepreneur, someone starting their business or in the earlier days.
Yeah, I would say, actually, two things. I was asked a question like this. I was being interviewed last week. What's the one thing that I'd offer if today was my last day? And I said, well, be a creator. So as a new entrepreneur, realize that you are creating something. Make that tangible, that you are creating something. This is not just a job. This is not just your ideas. You are creating this. So, I believe that there's a mindset that you need to understand that you are creating something. And that's beautiful. That's going to bring you joy. So be a creator. And then the second thing, and my wife and I were in the Czech Republic a couple of months ago, talking with students who were from 19 different countries, and these were business students at a Christian academy. It was absolutely fantastic. And I said that I told them, and I firmly believe it, that no one succeeds alone. No one. All right. And so as you're being an entrepreneur, get good partners, good people, make good strategic relationships, and treat each other with honesty and integrity. And because realize that no one succeeds alone. No one. So those are the two things I would say.
Yeah, incredible advice, and couldn't agree more on the creator aspect as well. Just the fact that you are truly in control of your own destiny as an entrepreneur, and you can make it as big or as little as you want. If you just have to understand that you are the creator. So I think it's great. Last question, Eric. We'll be done here. You mentioned true wealth. Mm-hmm. We talked about success, but how do you personally define true wealth or success in your life right now?
Well, how I define it is having that balance of those assets that I just mentioned, and to have family involved. And so for me, and you can hear in my voice and the things that I've spoken about, there's a common theme: family and being able to see how we can perpetuate that family influence and make our dent in the world. And I'm choosing it to make my dent with families and reducing loneliness. And that's what true wealth is to me, is how I can make that dent. I think one of your other podcast members said, make your dent, and I've kind of adopted that, make your dent in the world.
Yeah, I love that. Well, no better way to end, Eric. I really appreciate you sharing your story, and I can hear the passion in your voice. So this will be really valuable to listeners. Thank you so much for taking the time.
All right. Thank you, Chase.
Thanks for listening to the Chase Hudson Show.